In 1637, one single flower was worth more than 12 acres of land, a house in upper-class Amsterdam, and 15 cows. Farmers, brokers, middlemen, all made millions of dollars almost overnight. But the middle class and small investors lost everything. About 100 years after the New World was discovered by Christopher Columbus, as the whole world was rushing to the land of infinite opportunity, the Ottoman Empire was selling an opportunity that would make even more money: tulips.
Tulips. They quickly became a status symbol all over Europe, which led to middle-class merchants buying tulip bulbs as investments rather than for display and gardening. The market exploded, which made investors go all in. Even Isaac Newton, even the guy who discovered gravity, invested and said, I can calculate the motions of heavenly bodies, but not the madness of people. Little did he know how mad things would become. The market exploded, with so many investing that people even began buying and selling futures contracts, betting on how much tulips would be worth in months and years ahead. As winter arrived to the continent, it came with a virus of insane speculation. The price of a tulip bulb was worth a decade of a salary for a skilled tradesman. People of all classes, including inexperienced investors, began hearing about the golden flower, throwing every last shekel they had because everyone wanted to get rich fast. Well, as Newton discovered with gravity, what goes up must come down. Prices crashed about 99% and fortunes evaporated overnight. Now, this lesson isn't about tulips or trade routes. It's about human psychology, greed. So what does a tulip have to do with you and your portfolio in 2025? Well, history repeats. At the very least, it rhymes. Fast forward to the 1990s.
Let's rock this joint!
And we say, goodbye, 80s, hello, 90s.
Welcome to Blockbuster Video.
Destination, Planet Hollywood. An online network called Internet.
The internet is the next big thing. Everyone was just throwing money at companies that had no profit, no plan, just a .com in their name. Does this sound familiar yet?
It's described as nothing short of breathtaking, a points drop never before seen on the US markets. This closing bell might as well have been an alarm, so savage was the selling. It lost a quarter of its value in just 1 week. And spare a thought for Bill Gates. The Wall Street collapse cost the world's richest man a mere $1.8 billion this week alone.
Pets.com, complete collapse. Webvan, bankrupt. Millions of investors lost billions. But why? Because everyone wanted to get rich fast. Now we arrive at something much closer to home. Because what came in 2008? Oh, this one's painful. A complete global financial meltdown.
This will bankrupt the entire system.
There are fears the sell-off will continue on Wall Street.
Soaring gas prices, falling home prices, and rising unemployment.
What kind of recipe is that? Overall, that's a recipe for a recession.
2008 wasn't about tulips or tech. It was about the roof over your head. People were buying property they couldn't afford. Banks were approving loans they shouldn't have. And Wall Street was packaging that risk into something that looked safe. Result? Wiping out the inexperienced investors and middle class. Look, I've been in finance for years, and I try to warn people. People would say, oh, this time it's not the same. That it wasn't. What's unique between the common investor and the ones who walked away with generational wealth? It's not just good luck. It's human psychology. It's greed. Beginners don't invest. They gamble. They buy because everything's going up, not because they understand why. And when things crash, they panic sell. Look, we've both seen it probably 1,000,000 times. And every time, isn't it the same story? They lose money and say, investing is a scam. No, the beginner just didn't have the right strategy, tactics, training. You see, the pros don't chase hype and speculation. They study the fundamentals. They understand the cycles. They know when to buy, when to sell, and when to sit on their hands. Which brings us to the present day. Bitcoin's rise from 1 penny to 105K feels like the ultimate win for the amateur investor. But just like tulips in the dot-com bust, people are asking the same question. Am I too late? Should I buy now? Will it keep going up? But here's the thing about Bitcoin. It's not just hype anymore. It actually is unique in this occasion. Something that's so disruptive that only you can own, that can't be taken from you by the powers that be, that can be sold and traded instantly. Something that actually puts the power in the pocket of the people, not the powers that be. It's history in the making. And history has a pattern. The smartest investors win. And the amateurs are left in the dust with nothing. They play long-haul games, not get-rich-quick schemes. And they don't let the crowd dictate their moves. Bitcoin at 105K, it might go higher or it might drop. Here's what pros ask themselves. Do I have the skills to profit either way? Because that answer changes everything. You don't need to be the smartest person in the room, but you do need the right skill set, tactics, strategy, and team. Right now, Bitcoin's at 105K. This is your moment to stop making the mistakes that have ruined investors for centuries. Look, if you want to learn how to invest like a professional, avoid the hype traps and build some wealth, join my community. Click the link below and let me, our team, our community help you learn the skills to help you navigate the market and come out ahead. Your future self will thank you.